the world monetary system has a massive problem, and I believe that's where we are. We're in the early throes of it. The world most people know and the world most people understand is the anomaly. It is this idea that money has no anchor, there's no sound money at the center of the system, but trust is ebbing away, and at the central bank level, I think it's been broken. At the societal level, I think it's in the process of breaking. And when trust breaks down, that's when you get serious disorder. And serious disorder, not just in the monetary system, but in the social contract, in the streets. We've seen this happen multiple times in history, and that's why gold will ultimately be repositioned as the anchor of the financial system. First of all, to stabilize it, and then to allow another system to be built. And I think that's kind of what we're on the cusp of.
Welcome to the Microscopic Podcast presented by GoldRepublic. My name is Alexej Jordanov, and in this format I invite you to look at the world through different lenses, to see what's hidden in plain sight. I hope you will get fresh insight and enjoy this conversation. If you do, as always, please give it a like and subscribe, but also leave your actions down below in the comment section and share it to those who need to hear this. But before I start, I'd like you to know that if you open an account at GoldRepublic, you will receive 1 free gram of gold. Just click on the link in the description.
There you go. All right, away you go.
Well, it's an absolute honor to this time interview you in person.
In person, yeah.
You're the co-founder of Real Vision.
Yes, long time ago, but yes.
You're one of the people I think who inspired more content producers or content creators, I think, in the industry to also be a bit more creative about how to come across, to put across content that is a bit complex, like financial content that we've also talked before. Complex world. So I want to give a lot of appreciation to
that's very kind of you. I appreciate that. Thank you.
Today we're sitting actually in the context of the documentary that we are recording at the moment together with the AMFIF based on the report Gold and the New World Disorder. And we're sitting here in Zurich during the Precious Metal Conference Summit that is happening at the moment. And we have obviously lots of topics that we'll go through. Some of them, as I mentioned also in previous interviews, will be featured in the documentary that we're producing. So this is one of the interviews that is featuring this series, I would say. And obviously the theme is gold.
Yeah.
To no surprise here. And allow me to ask this first very basic question that we've kind of alluded to at the very beginning, which is around the concept of money, but also more precisely, what is gold to you?
To me, well, it's interesting. Gold. I think the easiest way for me to answer that is, if for me particularly, gold became the solution to a problem that I saw building. This was back in the early 2000s. I'd seen central bank responses. I'd seen QE start in Japan. I'd seen interest rates get slashed at the first time of trouble. And I sat and thought about what all this meant. And I realized that the problem I, as an investor, as a parent, as a saver, was going to have to try and mitigate was the debasement of my purchasing power. And so, until the early 2000s, I hadn't really thought much about gold as anything other than a commodity. I hadn't really dug into it. I hadn't really tried to understand it particularly well. And the more I read about it, the more I came to understand that it was actually the perfect solution to the problem that I saw coming, and that if my purchasing power was going to be debased actively by central banks, gold was going to, if not guarantee me a good outcome, it was going to be the simplest, most time-tested solution to that problem. So that's when I started buying gold, 2003. And I've been buying it ever since, and it has done exactly what I hoped it would do. I don't buy it because I think the price is going up. I don't buy it to trade it and make a profit. I buy it so that I can hold my savings in something that is going to stand the test of time from a purchasing power standpoint. And gold has done that and more for me. So I'm a very happy holder of gold. I don't get freaked out when the price goes down. I don't overanalyze it. I don't worry about this and that and the other. I'm intrigued by it. I'm interested by it. But yeah, for me, it was a solution to a problem, a particular problem, and it has solved that problem perfectly for me.
And we'll come to that problem in a second, but first of all, I'm curious to know how you see the evolution of gold within the monetary system. What are, to you, the most important phases that you would determine of gold in the last, let's say, 250 years?
Well, it's interesting, when you pick that time frame, the thing that most people struggle to understand is that over that period, the world has been on some kind of gold standard for more than it hasn't. We happen to have lived through this 50-year purely fiat experiment, and so that becomes our norm. When the reality is, over that 250-year period, the world has been on a gold or bimetallic standard of some sort for the vast majority of it. And with good reason, because it does tend to crimp the profligacy of politicians to kind of promise and spend and win elections by spending money they don't have. And so it's a strange thing that the world most people know and the world most people understand is the anomaly. It is this idea that money has no anchor, there's no sound money at the center of the system, is an anomaly. And yet it's what people have become used to. So when you talk about, I gave a presentation back in 2018, I guess it was, called Cry Wolf, where I talked about the likelihood that at some point the world will return to a gold standard, not through choice, but through necessity. And it wouldn't necessarily mean that we would be back on a gold standard forever. But as people's faith in the system, as people's faith in money in terms of currency and its purchasing power starts to wane, you need to go back to some kind of anchor, which is what the gold standard always was. And I feel, as I've watched this last 7 years play out, that we're still heading on that path, and we're getting closer to it all the time, where gold will need to be reintroduced to the financial system to stabilize a set of fiat currencies that have lost any kind of anchor. And we're definitely there yet, but people, I don't think, have made that connection that gold will ultimately be the anchor, even if it's temporarily, that will restore some kind of confidence in the monetary system, in that there is something underpinning money as people understand it. And that has always been, and I believe it will always be, gold.
So if we look at now the most important factors that determined this, let's say, just from a purely price basis, the move of gold, but more importantly, the way central banks behaved around their reserves. There's been very known periods of demonetization of gold, of big sell-offs of gold up until the 2000s. And then since 2008, the great financial crisis, there's been a shift from net sellers to net buyers within central banks. How do you explain that?
Well, I think that's actually one of the easier things to explain to me, in that the people debasing the currency are central banks. The people owning the gold reserves are central banks. They know what they're doing. We often, when commentating on these things, talk about how these foolish central bankers or these idiot central bankers, they're not idiots. They know what they're doing, and they know that gold is actually the antidote to this monetary debasement. But I think there's been a couple of periods in terms of the change in reserve composition. And they're important to understand. That in 2014, central banks in aggregate stopped increasing their purchases of US Treasuries. So that's a decade ago now. And one country might buy some more, and other countries might buy less. But if you look at the overall foreign central bank official holdings of Treasuries, it peaked in around 2014, and it's been declining ever since. That is a tell, but that as a risk-free asset, the US Treasury is now not what it once was. But the big change for me came in 2022 when the US Treasury sanctioned the Russian central bank holdings and basically froze them, because that act is tantamount to a declaration of economic war. You know, what you do I mean, we've seen sanctions for years in terms of individual banks or countries that have had businesses sanctioned through the SWIFT system, but to actually freeze a sovereign reserve asset, I think was catastrophic overreach on the part of the Treasury. I like to think they know what they're doing, but I don't know what worries me more, the fact that they did this without thinking about it, or they did it after thinking about it. Either outcome is terrible, but if it was a considered decision, then I'm even more concerned about it, because what they did by freezing those Russian central bank assets was they essentially told every single central bank in the world, there is a set of circumstances under which we will freeze your central bank assets, your reserve assets that are held in dollars. And that becomes an issue of national security. And there isn't a country in the world that owns dollar reserves, and every country in the world owns dollar reserves because it's the de facto energy currency in the world. So if you export oil, you receive dollars in payment. If you import oil, you need to hold dollars to pay for your oil. You've just told every single one of those central banks that we can no longer guarantee that those reserves are sacrosanct. And you've seen since then very, very clearly that central banks the world over have not been rushing to dump their treasuries, but they are consistently and steadily reorganizing their reserve asset composition. More gold, less treasuries. And it may just be that they're letting treasuries roll off. They're not bidding as aggressively for them. But you can see the central bank purchases quarter by quarter since then have gone through the roof. And I don't think that's going to stop anytime soon. A combination of that and the increasing price of gold has now pushed gold above treasuries as a reserve asset. It's just happened in the last week or so. And I think that's going to continue, because gold is the only true neutral reserve asset. It's nobody's liability. It can't be confiscated if you hold it in your own auspices, in your own country, in your own central bank vaults. And that's a massive, massive change, because it speaks to a loss of trust in the system. And the entire financial system is built on trust. If central banks feel they can no longer trust the US Treasury, the world monetary system has a massive problem. And I believe that's where we are. We're in the early throes of it, but trust is ebbing away. And at the central bank level, I think it's been broken. At the societal level, I think it's in the process of breaking. And when trust breaks down, that's when you get serious disorder. And serious disorder, not just in the monetary system, but in the social contract, in the streets. We've seen this happen multiple times in history, and I think that's kind of what we're on the cusp of.
So you've alluded to the fact that U.S. Treasuries decreased in terms of, and as you pointed out as well, gold just surpassed actually U.S. Treasuries a few days ago, and paradoxically as well, and this was also, I think, in the presentation of Ronnie this morning, is that the holding of U.S. Treasuries also increased in the same period as gold reserves increased. So it was a parallel. So it means that gold really accelerated in terms of reserves in central banks, but also just in general with retail demand. But the U.S. Treasuries too, even though they were already having a lag, as you said, the less aggressive bids and so on and so forth. How do you explain that?
Well, it's important to understand who's buying the treasuries. It's not, in the aggregate, it's not foreign central banks anymore. There's been a lot of hedge fund buying, and I think the presentation you talked about, Ronnie talked about, the biggest buyers have been hedge funds in the Cayman Islands. And that's part of a very old basis trade, right? They're selling futures, buying cash, and using massive leverage, because it's just such a tiny spread, to try and make money out of that. It's a pretty reliable trade. And don't forget that the US has a problem that it needs to find buyers for treasury. So if you look over the last 10 years, there have been all kinds of adjustments made to the incentive structure to essentially coerce people into buying, whether it's pension funds, whether it's individuals, to buy more treasuries, because they need to keep the bid there. Those bids are a lot more flaky than central bank. Central banks have hundreds of billions of dollars of reserves they need to find a home for. And if they're on side and they're buying treasuries, that's a great thing for the US Treasury, because they know that the demand they can count on is in the hundreds of billions of dollars. That falls away. And once you lose big buyers of hundreds of billions of dollars of treasuries, you have to find, 100 buyers of $1 billion of treasuries, and that becomes more problematic. So I think you're going to see regulations change to mean that banks particularly have to hold more treasuries, that pension funds need to hold more treasuries. Russell Napier has talked consistently about yield curve control and financial repression. I think that's going to come because ultimately the US, in order to fund itself, has to find somebody to buy their treasuries. If it comes down to the Federal Reserve being the buyer of last resort, which it has at various points in time, that becomes a problem now, because we get into this direct monetization of the balance sheet, and that's the way fiat currencies go to God, right? Ultimately, people no longer want to own the currency anymore. And all these things are very big shifts. They're very big changes. All of them have happened before, all of them. Just in our lifetimes, we haven't seen the global hegemon's currency be debauched to the point where nobody wants to own it. The pound sterling was the reserve currency of the world. That went away essentially in 1956 in the Suez Crisis, when the US was able to essentially strong arm sterling out of the way and put the dollar at the center of the world financial system. But because the dollar has been there and been solid this whole time, the last 50 odd years, we assume it never will go away. And whilst I'm not saying the demise of the dollar is imminent, it's ultimately inevitable. We just don't know when that's going to happen.
Are you also, let's say, a believer of what Brent Johnson, like in the dollar milkshake theory, would say that, this is true, but it will still be, in that case, the best or the cleanest dirty shirt in the pile?
Yeah, this whole cleanest dirty shirt analogy, I mean, it gets trotted out all the time. Brent's a dear friend of mine, and I think he's been spot on with his milkshake theory. I remember being in San Francisco and watching the first time he presented that, and it was a really thought-provoking presentation. I think, though, once we get to the stage where one by one these currencies are toppling, it's going to be very interesting to see what happens when the end game becomes clear, which is the dollar. Because generally speaking, once the end game becomes clear, people try and get to that quickly and not have to go through all the steps. So I think Brent's been proven right. I think he is right, but I think the last phase of this milkshake theory is where perhaps we could see it play out very, very differently, in that people decide that the way to make some real money is to be the first guy to realize that the dollar is ultimately going to be maybe the last, but ultimately the biggest casualty, and the biggest casualty offers the biggest chance to make money. So we might see that acceleration into the demise of the dollar happens very, very quickly, because everybody can see, but by the time we get to that point, everyone knows where this is going, everyone. And so it's going to happen very, very fast, I suspect.
Forgive me if it's, I'm kind of going back a little bit on the central bank question, but you've alluded to that, but for the sake of it, why do central banks even still hold gold?
Why do they still hold gold? Well, Ben Bernanke was famously asked this by Ron Paul in congressional testimony, I don't know, at least a decade ago. And his answer was tradition, which is absurd. Gold is money. Everything else is credit. JP Morgan said that 100 years ago. So why do central banks hold gold? For the same reason other people hold gold. It's money, and it's money good, and it's not subject to the whims of printing presses. It can't be created out of thin air. And so, as trust in other forms of money, vis-a-vis treasuries, etc., starts to wane, that money is going to be put into gold because it's trustworthy. And, I've talked about this idea of trust for a number of years now. And it's so important to understand. Without trust, the monetary system doesn't function. And you are seeing trust eroding on a daily basis. Trust in politicians is all but gone by the electorate. Trust in central banks is all but gone by citizens in multiple countries. Trust in the dollar is waning. Trust in treasuries is waning. All of those roads lead to gold. They lead to gold on a national central bank level, because you can't trust other countries to maintain their finances in such a way that the debts that they owe are going to be repaid. It's the solution to people like me that fear that their savings is going to be debased. It's the fear for people who fear that inflation is going to overwhelm them. They can trust gold, but you can't trust a politician's promise. You can't trust a treasury bond. You can't trust a fiat currency. What can you trust in? And in a society that functions on trust, gold is the answer to that question from so many different angles. And I don't think people quite realize the questions that gold is the answer to yet. We haven't got to those questions, but I think we're going to get there in time.
What are those questions?
What can I trust? Does the money in my pocket have any value whatsoever? Are the people responsible for making sure that the money I get paid today will put a roof over my head? Can I trust those people? The answer is no. The answer has always been no, but that's why we have these cycles. You have cycles where the debt either gets defaulted on, gets inflated, or expunged, whether you call it a full turning moment where institutions are torn down and we start again from a low basis of trust, but trust is built over time. And as trust is built, then the need for gold diminishes. Once that trust is inevitably proven to be misplaced, the need for gold comes back again. And that's why we see these cycles. That's why gold peaked in 1980 when trust was at its lowest and inflation was running rampant. Everything since then has been a case of trust being smashed to the ground, rebuilt over time, the need for gold diminishing. And now in the last 20 years, we've seen that trust start to evaporate and the need for gold rising again. And it's cyclical. There will come a time, I believe, hopefully in my lifetime, where I don't need to own gold, because we're in an environment where trust is actually growing rather than being chipped away. But until we get there, there's no price at which I would sell my gold. I would exchange it in good time for something that I want to own more. But does gold to 4,000, 5,000, 10,000? I may not want to sell my gold at $10,000 depending on what else is happening in the world. If you look at it today and say, I'll bid you 10,000 for your gold right here today, I'll sell it to you. But at the time when the fair market value of gold is $10,000, I think the world's going to be facing a lot more serious problems that probably mean that you need to hang on to it.
Well, it's kind of also common in the gold industry, right? There's a rejoice of the price appreciation, but that always goes with, that's what also our CEO Marlene always tells us is, well, it's maybe good for business, but it means that something is going really wrong in the world.
That's exactly it. Yeah, you really don't want a strong surging gold price, because that speaks of underlying problems that perhaps are gonna come to the surface. And that's, the idea of be careful what you wish for with a high gold price is really true.
Yeah, all those crazy numbers, like those 5-digit forecasts and all that, actually would mean that we are kind of in a Mad Max scenario, right?
Possibly, yeah, possibly. I mean, it depends how quickly they get there. Over time, gold could get to $10,000 an ounce gradually as the rest of the financial system ebbs away. But generally speaking, because the financial system is so important, getting that slow move to 10,000 is very unlikely. What you're likely to see is more periods like we've seen in this last 12 months where gold has doubled from 2,000 to 4,000. And 2,000 was an unassailable barrier to many people not so long ago. 3,000 came and went like that. We're through 4,000. It dipped below 4,000. Everyone said, well, there we go. And it bounced right back again. And that's a real warning sign for people who aren't really paying attention. It's nothing to do with the price. The price is what the price is, but the message it's sending by how resilient gold is being at after such a strong run should be raising serious red flags for a lot of people, I think.
I'm tempted to go in different directions now, but I'm
wherever you want. This is fun.
if we look at the way gold is priced, though, it's if we look at especially now what's been happening at the LBMA and the COMEX and what we would consider the pricing mechanism until now. Those pricing mechanisms have been criticized in the last 50 years. William Middlecope speaks about a war on gold, about the fact that also coming back to the truth and the trust part, that this has been repressed. Is this also now coming together, like all those factors that you just also enunciated, about the fact that those repression mechanisms are blunt, they do not work anymore? The fact that interest rates are high, but gold is still thriving, which is highly unusual, especially if we look at the way it's been behaving in the past. How do you put all those pieces together?
You know, it's a really interesting question, because in my own personal journey into understanding gold, in the very early days of that journey, I found out and I read about all the conspiracy theories about the suppression and the repression of gold prices. And they're very easy to believe, and there is plenty of evidence, and I'm certainly not saying that they're not true. But what I came to realize over time is they don't matter. Whether they're true or not, it really doesn't matter, because ultimately, because of the nature of gold, the price discovery will ultimately happen. And the price discovery, if the conspiracy theories are correct about, I don't know, let's pick one at random, about all the gold not being in Fort Knox. If that conspiracy theory is correct, then at the time when gold becomes the asset at the center of the financial system again, if only to stabilize it, and it turns out that that conspiracy is correct, all hell will get let loose and the price will go through the roof. If it doesn't prove to be correct, it doesn't mean the price is going to fall, because at that point gold is going to be at the center of the monetary system again, and people are going to need to own their gold. So you can have some real fun following the various conspiracy theories about gold price suppression, about Yamashita's gold, you know, this lost haul from the Philippines back in World War II. There are all kinds of amazing stories which are really fun to engage in. But the reality is, gold as money, gold as a protection of purchasing power, gold as a sovereign asset that's nobody's liability, it just is. It's an inert rock. It sits there. It has value because of the labor and the energy that is input to bring it out of the ground. And it's the price of everything else that fluctuates around gold. So when people talk about gold going to $4,000, what they're really talking about is the dollar falling in value. And people new to the world of gold don't necessarily understand that, because they're so used to everything being priced in dollars. So when they see gold, they assume that gold is also priced in dollars, which is just not the case. And so, I look at these conspiracy theories. I look at the COMEX. I look at the supposed number of paper claims on gold that don't exist. That are surplus to the physical gold that exists. And I say, yeah, they could all be right. But price discovery is karma. And if the day comes when we have a run on the bank effectively, and all those contracts stand for delivery on the same day, guess what? We'll find out. But it doesn't matter to me, to the price of gold. Gold is going to go where gold needs to go. And it is going to be far more respondent to declines in trust, to surges in demand from price-insensitive buyers like central banks, that the conspiracy theories are fun, and they might provide a real kicker at some point, but they're not what drives the gold price. Certainly not to me anyway.
Well, some conspiracies are, let's say, less than others. For example, the price manipulation with spoofing and all that billion.
Yeah, so they've been proven. They've been proven. And you know, the biggest evidence for me of manipulation of the gold price, which I've yet to find someone argue against, is just there's the famous chart of the gold price, but also what would have happened if you'd have bought gold overnight and bought gold at the close overnight and sold it on the open the next morning. The difference proving that gold is smashed after hours in the very thin markets on the COMEX, And the difference in those two charts, if you just sold it on the close in New York and bought it on the open in London, is so disparate as to be almost impossible to explain absent manipulation. That to me, that's my favorite way to say, look, if you don't believe gold was manipulated, explain this to me. But again, it doesn't matter. Ultimately, we're still here at $4,000 gold. All that stuff, all that noise has been going on for 25 years, probably more. We're still at 4,000 gold without that being proven or disproven. It's just an interesting speculation to engage in for me.
Sorry to interrupt this episode, but I'd like to tell you more about what we do at GoldRepublic. At GoldRepublic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, security safed in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at GoldRepublic, we offer real assets to safeguard your generational wealth. That is true in terms of dollars, but if we look at other currencies, the picture widens up, and more importantly, the pricing does have a function, especially for those who know how to value it, and that's going more and more towards the east.
Yeah, absolutely.
And that is kind of like what a lot of commentators in the past years, maybe in the past decades, have already been warning or describing, but now this is coming really obvious.
Yeah.
How would you make an analysis out of that, and who are the players and what are the interests?
Well, you make a great point. Gold is traditionally talked about in dollar terms, but of course, if you live in I was recently in South Africa. If you live in South Africa, the gold price is still quoted in dollars, but the rand price is more important to you. And if you look at what gold's done, right now it's making all-time highs in US dollars, but it's been breaking all-time highs in yen and sterling and Australian dollars and Canadian dollars for multiple years now. I think that is important. I think the fact that that gold is breaking out in every single currency on the face of the planet tells you something important, and we needed this dollar all-time high to be broken in order for the story to gain the kind of traction it needs for people to realize this is actually happening. Because to most people who do think of gold in dollar terms, if you tell them it's been making multiple highs in yen, they don't really care. It doesn't mean anything to them because in no corner of their life does the yen make any difference to them. It matters to the people of Japan, and the people in Japan who have been buying gold for multiple years. It has done what I set out to do with it, which is protect their purchasing power over and over and over again. For right or wrong, it's not until you get these big dollar headlines that the penny seems to drop to everybody. You need a strong dollar price for it to get the headlines around the world, and that's what's happened. And because in places like Canada and the United Kingdom and Australia, people don't buy gold, we've seen queues around the block in Australia, for example, recently. They made a lot of headlines. And I know ABC Bullion, that when I was living in Australia, that's where I used to buy my gold. There was never a queue there then, I can assure you. And back in 2011, when you had that run up to 1900, I was living in Singapore at the time, there were queues around the block at the gold stocks. But they weren't in Australia, and they weren't in London, and they weren't in Toronto, and they certainly weren't in the US. So the place that gold has in Eastern society is very different to the place it has in the Western society. In the West, it's been a speculation largely because we haven't had multiple periods of time where our currencies have gone to zero and politicians have debased them. We haven't had hyperinflation. We haven't had double-digit inflation. That are all familiar periods in Eastern culture. And so India and Vietnam and the Philippines and multiple countries across that part of the world are very used to holding their savings in gold, to try and get around the problems that their governments have caused them multiple times over multiple cycles. So we're in a period where Western retail demand really hasn't taken off yet. It's starting to, a little bit here and there at the margin, but gold is still an anomaly. It's still a curiosity to many people. They're starting to ask the right questions about why should I own gold? Why are people buying gold? But it's only by asking those questions and witnessing debasement of your currency, witnessing the loss of purchasing power, that will drive home the idea that gold is the solution to all those things. And it's not about the price, because if you go back to 2008, for example, the initial response to Bear Stearns, to Lehman going, was gold fell. And everybody said, well, what the hell's going on? You know, gold is supposed to go up in times like this. But if you look at what happened, gold fell by 30-odd% immediately and very quickly rebounded. The S&P fell by 66% and kind of stayed down there. So what actually happened was there was a liquidity crunch. Gold provided instant liquidity, the way it does, because there's always a market for it. People sold their gold to fund margin calls left and right. That was soaked up by the buyers of gold. Once the margin call was satiated, the buyers of gold took the price back up again, but the price of equities fell. So your purchasing power in equities went through the roof. You could buy 2 or 3 times more units of the S&P with your gold than you could the day before Lehman went under. But people don't think of it that way. They look at the price and go, well, gold fell just like my equities fell. The purchasing power is really the most important thing to understand. I gave a presentation last year and I talked about house prices in the US in gold. And I showed all the headlines about the house price being at all-time highs, and the unaffordability index, houses were unaffordable. But in gold terms, prices had fallen by 80%. You had to give up far less of your gold to buy that median house price than you had done 20 years earlier. So again, it's reshaping the way you think about the financial system. If you put gold at the middle of it and think about everything else in terms of gold, it changes the way you see everything. And once you look at it that way, it's very difficult to go back to seeing the financial world the way you've been accustomed to over years, which is through fiat eyes.
And well, that's a very good transition, I think, to the next topic, which is the way the East is starting to, well, not starting, has been already since decades already, capitalizing on gold, using gold as the anti-dollar trade and to rebuff the balances. If we look at purchases from central banks, it's mainly East and east of Europe as well. Czech Republic, yep. Poland being the most aggressive buyer, Hungary, and then obviously the obvious suspects, Russia, China, even India. If we look at that, how would you then describe the play at hand for those nations, the ones that have been disgruntled about the dollar and they want to have kind of this monetary power again? How would you describe this?
Again, I think this comes down to trust. I think some of the countries you've named there felt like America was a trusted partner. Even as we've seen China rise, I'm not sure that's the right word to use, but let's stick with it because most people don't understand what it means. But as China has become wealthier, as it's become more important geopolitically, it's increased its desire to stamp its authority on its part of the world, on the eastern half of the world. The Chinese see no reason why the US should be the hegemon in Asia Pacific, and they're probably right. Over that period, though, the alliances that America's had with the likes of South Korea, with Japan, with India, have been strong. And those countries have very much been in the US orbit. They have trade deals, they have military protection deals, and the US has been a trusted partner for them. As the dollar loses its purchasing power, as Treasury bonds become less reliable due to the US government's profligacy and the sheer amount of debt the US is racking up, it's become less of an imperative for these countries to hold so many Treasury bonds, as we've already discussed. But because of all the benefits that come with being in the US orbit, particularly in terms of protection and arms sales, et cetera, it's been very difficult for those countries to extricate themselves with that system without incurring the wrath of the US, particularly through sanctions, particularly through the SWIFT system. And the US has played that aggressively. I think they've, as I said earlier, I think they've overplayed that now. So you've had the Chinese trying to assert their independence, assert their strength on the region. You've had other countries in the region for whom the US has been a trusted partner. But now, particularly post that sanctioning of Russian central bank assets, the ability to trust the US has weakened materially. That's clearly obvious. And so you've had the Chinese-driven attempt to build an alternative system alongside the US system, which people term the BRICS. This is how this began, with Brazil, Russia, India, China, and South Africa coming together to form some other kind of alliance that wasn't really a threat to the US. It was just some way of negotiating trade deals between them. But as trust in the US wanes, its power in terms of what it can do via the SWIFT system hasn't changed. And so you've got a lot of countries that are trying to find ways to not be at the mercy of the US. Because if the US is becoming weaker, if its preeminence in the global financial order is weakening, we all know what happens when countries are weakening, when they're dying. They tend to lash out. They tend to use the power they have less judiciously and with prejudice. And so that's really what we're seeing play out. I think you're seeing all these other countries now looking at the US and saying, well, we need to gently, if not move ourselves into the Chinese orbit, we need to give ourselves options. And gold is a great way of doing that, because if you swap treasuries for gold, you're not saying we are now pro-China, we're not part of the BRICS, we're moving to a more neutral asset. That neutral asset, should the time come, can easily be put into the BRICS system, and you can start buying Chinese bonds with it. So neutrality and the option of watching how this US-China struggle plays out, having a neutral asset in the middle, seeing which side comes out on top, and then being able to easily move between the two, it's just smart politics. And the US has given all these countries a choice to make, which they didn't have before, because they could trust the US. And I think that's what we're seeing. We're seeing countries start to try and figure out, okay, how do we keep our options open? It's not by having more treasuries. It's not yet by buying more Chinese bonds, because that sends a message to the Americans that we're not trusted partners. But buying gold is a brilliant answer to all those solutions. You're not saying anything negative about the US. You say, well, we're choosing to own more in gold. Just like, you own 8,133 tons. So you get the joke, right? So we own a few thousand tons. We're maybe going to go increase that. And it's very tough to be beaten with that stick. So I think it's optionality. I think the BRICS thing is real. I think it's real in terms of they all have a shared need to find an alternative and find a way to not be completely beholden to US policy. And gold provides the perfect solution to that.
How would you see that then, the mechanism of pricing then moving east? How would that look like? Would it be Moscow? Would it be in Hong Kong? Would it be in
Moscow's
Singapore?
a stretch. Moscow is a stretch to see it priced there, but we're already seeing it priced in Shanghai. Gold is now, one would argue, it is debatable, but one could put forward a very strong argument that gold is now priced in Shanghai. That's certainly where a lot of the deliveries are going through. Physical deliveries in Shanghai have gone through the roof. Volume has gone through the roof. So the Shanghai Gold Exchange, which when it was launched a decade or so ago, was kind of a laughing stock. And people said, well, it's never going to supplant the COMEX, it's never going to supplant the LBMA. Maybe it hasn't yet, but the direction of travel is very, very clear. And the interest in the Shanghai Gold Exchange is rising. It's becoming a much more sensible place for a lot of people to do business. And I think that's going to continue. I think the LBMA and the COMEX are still extremely relevant, but the Shanghai Gold Exchange has gone from being a curiosity to a very vibrant, very important part of the global gold trading network now.
And what do you think of this then two-monetary system emerging? Because on one side, we see also Trump and his team that put out kind of like a plan as well to use gold in their advantage in terms of rebalancing global trade, leveraging gold. So it looks like the two blocks, the East and the West, are trying to find angles to reshore or re-anchor gold on their own terms. How would you describe that process?
Well, it's interesting because what it seems to me is happening, and I've read some very interesting people talking about this, is that you've got essentially the US are trying to build a new financial system around stablecoins. And China and the BRICS, I believe, are trying to do the same with gold at the center. The reason for each is the same. However, the one thing I would say about that, and I'm still trying to get my thoughts around this because it's kind of happening now, and it's not far enough down the track that we can really see the outcome. But as I sit and think it through, the Genius Act and the use of stablecoins in the US, I can see why that's going to be very good for the dollar. The one thing I believe to be potentially its Achilles heel is that it's being done out of necessity, because the stablecoin system means that there's another big buyer for Treasury bonds. Stablecoins will be invested into Treasuries and maybe into gold as well, but what Scott Bessent is trying to do is create demand for Treasuries. And they need to create demand for Treasuries. And so any system that is born in some part out of necessity, I feel has a potential Achilles heel. I think the fact that gold is a completely neutral reserve asset, you're taking away that no one's trying to build a gold-backed system because they need people to buy their gold. Gold's completely neutral. And so as I look at this and I'm watching it now to see how it unfolds, my concern, and I haven't had the question answered yet because we're not far enough down for there to be an answer, I think, is that while stable coins might be a very good idea and might provide demand for dollars, when people talk about it providing demand for dollars, what they're actually talking about is providing demand for Treasury bills. And if confidence goes in the Treasury market, if America's finances reach the point where people no longer are happy to receive the kind of interest rates they are happy to receive on Treasury securities right now, that's a big Achilles heel for any stablecoin / Treasury based system. Gold doesn't necessarily have that problem. So I think it's too early to decide one is better than the other. But if I had to pick a system that will ultimately endure, I would have to pick the completely neutral reserve asset system built around gold, rather than one that is built around Treasury coins, which will be a proxy for US Treasuries.
And if we now look at, investigate more of the use case of gold in trade settlement, we've seen intra-BRICS trades settled, but more on an occasional, sporadic basis, not on a systemic basis. So if we now go forward and go with this idea of a gold-backed system, how would it look like? How much would we need in terms of gold? Would it be a net settlement? Would it be a gross settlement? How much should the gold be valued at to be able to represent those enormities in terms of billions of dollars of trade?
Well, this is one of those interesting questions when people talk about, well, there isn't enough gold in the world to back this kind of system. I mean, of course there is. It just depends on the price you place on an ounce of gold. One would imagine it would be a net settlement system. A net settlement is able to happen because there's trust. if you didn't have trust, then you'd want gold in payment, physical gold in payment for every single thing you did. But what gold does, it facilitates that trust. If let's say you choose a central clearinghouse where all the gold is stored, and this goes back to how a gold standard used to function. Back then it was the US. It was largely done through the Federal Reserve Bank in New York, and that the gold was held there, and they would take a sticky post-it label and they'd stick it on this gold and stick it on that gold. They'd move it between vaults, and it all worked because there was trust in the system. We've already seen the decay in that trust when Venezuela and Germany and other countries have demanded the repatriation of their gold. They were no longer happy to hold it in New York. They wanted it on their own territory. That was the first sign that trust in this particular system was starting to wane. But if you're creating a new gold-backed trading system, even, as I say, and I want to stress this, it's a temporary solution to a monetary system that's fragmented past the point of use because the trust in it has gone. You do have the ability to settle net in gold terms if the trading partners trust each other. And that's one of the great beauties of it. And that's why I think it's a better system, because gold is trustworthy. If you can set up a system whereby where it's held and the physical transactions of that system are done through a neutral counterparty, however you do it, the asset itself is trustworthy. 0.9999 gold is the same for every counterparty in the world. So this to me is the advantage that a gold-backed system has over a stablecoin / treasury-backed system, is you can trust it. And so that to me is where this is going. That to me is why gold will ultimately be repositioned as the anchor of the financial system. First of all, to stabilize it, and then to allow another system to be built. And after that, I dare say that there will be an enormous amount of pressure to remove gold again from the anchor of the financial system, because it does not only provide an anchor, but an anchor in the terms of the weight it provides that stops politicians spending beyond their means. So I think we're going to live through a return to the kind of monetary system that the world knew for when we started this conversation for the best part of 200 years. People aren't going to like it. It's going to be uncomfortable. It's going to create austerity. It's going to stop profligacy. But all of these things ultimately are not only good things, but they're vitally important in order for us to transition to a new monetary system that is built on a solid foundation. And we will over time trash that as well, but we'll have a 70, 80-year run where we can build again on a trustworthy, viable system that isn't completely funded by debt.
I spoke with a commentator, Eric Young. He's on X, called King Kong 9888, and he also floated the idea of a bimetallic system where India, being actually one of the biggest hoarders of silver since quite some time, would also use that to its advantage and use the monetary aspect and characteristics of silver decoupled from the industrial use to it. What are your thoughts around that?
Yeah, look, there's plenty of precedent for bimetallic standards. Gold is not the only precious metal. It gets a bit trickier once you get past silver. I mean, platinum, palladium are certainly not conducive to being put at the center of a monetary system, but silver has performed that role for centuries before. There's no reason it can't be reinserted as part of a bimetallic standard. And these are the questions really that need to be answered. Will it be a gold standard? Will it be a silver standard? Will it be a combination of both? It probably makes sense to be a combination of both. But for me, the beginnings of that will be gold, because gold is a monetary metal. Silver has much more industrial use than gold. And so, silver has been used up over the years. Every ounce of gold that's ever mined is still in existence. So I think the initial return to this, because it will be through necessity, not choice, gold is the simplest, cleanest way to establish a new metallic money system. silver could be added to that very, very easily, and I dare say it probably will be. But I'd be much more confident in gold being the genesis of this return to a sound money standard than saying silver will instantly be a part of it.
We talked briefly about it on our last conversation, but you don't think that Bitcoin, for example, will hold any of that all, even though the proponents of Bitcoin will say, well, it's digital gold, it's transportable, transactional, all that's limited. That will be still for you out of the question, out of the picture in that type of scenario.
I don't think it's out of the question. I don't, but at the same time, I don't hold myself up to be any kind of expert on Bitcoin. I understand the premise behind it, but I don't devote enough time to following it and staying current on it and understanding all the rapid change that happens in any technology-based thing like that. I understand the argument as to why Bitcoin might be a part of this. The argument makes perfect sense to me. The place where I struggle with Bitcoin as being a part of this is that we're going back to a monetary system that is anchored by something you can trust. And whilst I understand that Bitcoin, by dint of the network, solves the trust problem, what we're talking about is a real world trust situation here. And Bitcoin has a 16-year history. Gold has a 6,000-year history of being trustworthy. And whilst the Bitcoin community trust it implicitly, this is not what we're talking about in terms of monetary reset. Is something that every man in the world, in the street, has to be able to trust. And the vast majority of them don't have access to computers, don't have access to Bitcoin, and they won't trust it. It may be trustworthy, but if you go to a slum in India and show them a gold coin or a thumb drive with Bitcoin on it, I promise you, not one of them is going to opt for the thumb drive because they trust gold. And so if you are being forced to reconstitute a financial system around something trustworthy, Bitcoin may well be trustworthy to the people that understand it. I just think it's too early in Bitcoin's life to give it a role that important at the center of the monetary system. And I fully understand why the Bitcoiners will be throwing fruit at the screen here and calling me all kinds of names. I get it. I just think the kind of event I'm talking about is the kind of rebasing of trust that it's impossible to do with what is relatively new technology. I'm not saying Bitcoin isn't trustworthy. I'm not saying the people that do trust it have misplaced that trust. But I think at a time when you need to foster trust among the entire population of the earth, Bitcoin doesn't have the longevity, doesn't have the credibility amongst the number of people it needs in order to place it at that particular point in the system.
The same fate would then automatically apply if we look at central bank digital currency, I guess, which is, for one, maybe a desperate attempt of central banks to lock in their citizens and a mechanism that is more and more riddled with control. With the digital euro is also now in the process of being accelerated in development. Do you think this would stand a chance? Because again, you've talked about trust. That's something that you also said that people don't trust central banks anymore. Do you see this even as and people are worried, obviously, but would this even work then?
It's a good question, because what it is a form of control. You know, a currency that is a central bank digital currency gives control to the central banks. And there are periods where the populace have great faith in a central bank. You go back to the Greenspan Fed. People had tremendous faith in Alan Greenspan. He was the maestro. You know, people believed everything he said and hung on every word. For someone like Greenspan, at the peak of his confidence, to instill a central bank digital currency would be far easier were the technology available to him then it would be for central banks to institute a central bank digital currency now, given the kind of waning of the level of trust that people have in central bankers. Again, it's a trust thing. Now, the difference with a central bank digital currency, it can also be a highly coercive thing, and it could be forced upon people. Central bank digital currencies do provide solutions to the problems faced by central banks. They don't provide necessarily solutions to the problems faced by the citizens of a country. So again, in a high trust environment, even though they may not be in the best interests of the people, they might well go along with it because they have great trust in central banks. I think the moment when that would be an easy thing for central banks to get through, I think that's past. I think there will be tremendous opposition to that because people do have low and falling trust in central banks. So that's not to say they won't try and do it. I just think they will have a much bigger struggle on their hands to get that through now than they would have done had they had the ability to try it 20 years ago.
On this note, I want to thank you, Grant, because it's always an absolute pleasure to talk to you, and I would even say even better in person. So I hope in the future we can repeat this in some shape or form. Obviously, to those listening and viewing us, Grant, you have all kinds of resources on your website, grant-williams.com.
Yep, that's it.
So you can find all kinds of podcasts and resources that you have there. And don't forget to subscribe, obviously, and like this video and drop your comment, your questions. Maybe Grant will see them or not, we'll see. Just share with us what your thoughts are on this topic. And I want to thank you again. And
it's been a great pleasure. And I think what you're doing is really important. So keep doing it and keep spreading the word, because the more people understand this stuff, the easier the decisions are going to be for them to make in times when you're going to have to make some very serious decisions, I think. So keep on doing what you're doing, Alexej. It's great.
Thank you.